Welcome to Securities Showdown. Now, my name's Ken Finnan, and I'm happy to be on here again. Tonight, we're pitting two giants of the investing world against each other. Mutual funds versus ETFs. One's old school and proud of it. The other's lean, mean, modern, and ready to take over. Join us are Sarah, the ETF evangelist and the queen of efficiency, and Mark, defender of the faith mutual funds and their so-called personal touch. Buckle up. It's about to get heated. Even I don't believe this crap. Oh, the hot mic crap. Never mind. Sarah, you got 30 seconds. Why are ETFs superior?
Because ETFs are efficient, low cost, and transparent. Mutual funds are the dinosaurs of investing, overpriced and overmanaged. Why pay a fund manager to try and fail to beat the market when ETFs track the index for a fraction of the cost?
Dinosaurs, come on. ETFs are just knockoffs, cheap copies of real investing strategies. Mutual funds deliver active management with teams of experts who adapt to market conditions. ETFs don't have the strategy. They just follow the herd. Real investors know the value of professional management.
Professional management? You mean professional underperformance, right? Face it, Mark. Most mutual funds can't even keep up with the market. Investors are waking up and ditching your overhyped sales pitch.
Keep telling yourself that, Sarah. Meanwhile, mutual funds provide real diversification and careful stock selection, not just a cookie-cutter index. If you want quality, you pay for it. ETFs are just a discount shopping like TJ Maxx. If you're making money, it's because you're lucky. Okay, Mark, why should investors pay higher fees for mutual funds when ETFs are so much cheaper? Because you get what you pay for, Ken. Mutual fund fees pay for research, stock picking, and risk management. ETFs are cheap for a reason. They don't do anything. You're just buying an index and hoping for the best.
Yeah, and my clients are paying a fraction of what your clients pay for hope. Mutual funds love to tack on 12B1 fees, sales loads, and hidden costs. You say those fees pay for research? Funny, because most of that money goes to marketing and sales commissions. At least with ETFs, the costs are transparent and minimal.
And ETFs are completely free of costs, right? Wrong. Bid-ask spreads, commissions, markup, markdown, tracking errors, they add up fast, especially for active traders. Mutual funds have no trading costs and no intraday volatility. Stability matters, Sarah. The only thing you're paying is a sales charge up front. Oh, in ETFs.
Stability?
Yeah, okay.
Please.
You're going to get a commission
more like stagnation.
Out, right?
Your no trading cost argument is just code for we don't give
sucks.
investors control.
With
ETFs let you decide when and how to trade. Mutual funds trap you with arbitrary end-of-day pricing. It's like watching a show on Netflix and not getting to change the channel until it performs the index. You buy an ETF like the SPY, low cost, simple, and you get market returns. No gimmicks, no surprises, just performance.
And let's say you want something more strategic, like a fund targeting undervalued stocks in an emerging market. A mutual fund with active management can find hidden gems and capitalize on opportunities that passive ETFs are going to miss. Your precious SPY can't do that, Sarah.
Hidden gems? More like hidden risks. Emerging market funds are notorious for high fees and underperformance. With ETFs, you get diversified exposure without paying for someone to guess wrong. Let's not forget the tax benefits. ETFs rarely distribute capital gains, while your mutual funds are busy blindfolding investors with surprise tax bills. And let's not forget ETFs are at the mercy of market trends. If the index tanks, so does your precious SPY. Mutual funds professional management, they actively manage risk to protect the investors during downturns. We're the smarter choice for long-term stability. Mark, we know taxes are a big deal. How do mutual funds justify their capital gains distributions and all those taxable distributions every year? Because they're part of an active strategy to maximize returns. When we sell a stock for a profit, it benefits all the fund's investors. Yes, there's a tax hit, but it's a small price to pay for active management. ETFs dodge taxes because they don't do anything. Small price to pay? Spoken like someone who's never seen a mutual fund tax bill. ETFs use an efficient creation redemption process that minimizes taxable events. Investors keep more of their money instead of handing it over to Uncle Sam because their fund manager felt like rebalancing, and most of it ends up being long-term capital gains, which is a lower rate anyway.
And that's because ETFs don't actually manage risk or adjust to market conditions. Passive investing is lazy investing. Mutual funds put in the work, and yes, sometimes that means taxes. At least we're delivering value, not just tracking trends. Why is your fund type the better choice for investors, Sarah?
Because ETFs are efficient, flexible, and designed for the modern investor. Mutual funds are stuck in the past, charging high fees for mediocre returns. Choose ETFs if you actually want your money to work for you, not your fund manager's vacation fund.
And choose mutual funds if you want real management, risk control, and access to specialized strategies. ETFs are for people who think investing should be cheap and easy. Mutual funds are the people who want it done right.
Done right? You mean done expensively? Keep selling that snake oil, Mark. The rest of us are moving on to the 21st century.
And the rest of us will enjoy real growth while your ETFs follow the market off a cliff. Have fun being average, Sarah. And that's a wrap. ETFs bring low cost, transparency, and tax efficiency to the table, while mutual funds promise active management, stability, and expertise. It's a clash of innovation versus tradition, efficiency versus strategy. Thanks to Sarah and Mark for the fireworks. Join us next time on Securities Showdown, where the debates are as hot as your portfolio should be.
Yo, it's about that time. We going live with the Q&A, and I'm counting it down. Lock in with me. 5, 4, 3, 2, 1, go. We are live right now. The questions, the answers, the energy, it's all happening. Drop your questions in the chat. Turn that volume up, and let's make this a moment.
Let's go, baby. Happy Tuesday. Boo, Tuesday. I love this stuff. It's funny. I have the big screen now, so it's like literally I look here and the chats are way over there. I don't know what to do. Okay. Welcome on. Happy Tuesday. I love, again, my favorite night of the week. Unless it's Thursday, then that's my favorite night of the week. Don't forget, guys, we're doing the Series 7 membership is going out. We're doing it right after this is over. So when this is over, I roll right into the Zoom class. We do the Series 7, the Elite membership. That's the $99 one. Don't forget, guys, don't forget to check out Achievable. I have links on my other all my other videos. I have links to a discount code for that. You get I also have STC links. You get a discount there. Good stuff. Also, we can talk about our memberships a little. I'm letting some, if you guys have questions, so throw them in the chat. And Jeff will be on in a couple minutes, I think. So part of this, he should be on. I mean, sometimes he's a busy man. He's a busy guy. He works this job. He has this stuff. He has his real job. And then he has other family stuff going on with a bunch of kids getting ready for college and all that stuff. And doing some of these custom study plan stuff. He's pretty busy doing that. Also, if you don't like my style, remember, I have me. I have other tutors that I work with. I have Mike and I have Arseny, and then I have Mason who does a Series 79. They're a little cheaper. They're a little lower price. Welcome, Jeff. Ooh, there's the ghost man. I started early.
I was gonna. What's going on?
No, I did my Securities. I did the debate thing, and it ended early. So I was like, I'll get on. Why not?
I'm like, who are you talking to?
What?
I was like, who are you talking to?
Nobody. I was just talking to myself. That's exactly what it is. My tutoring, you go to series7exam.org. We have all the tutoring. Jeff, he can do the chat. He'll do the custom study plan. If you need questions, reach out to Jeff at Cap Advantage Tutoring. He'll get you set up. If you don't like my style and you want somebody who's a little more controlled and organized, check out Michael Weiss over at series7examtutor.com. He's in the high 90s, unless it's on a weekend, then he's a little more expensive. Okay. I think we covered a lot. Okay. So now that I know what Jane's looking for, and I think she connected it, is if a husband and wife each own 6%, that would be considered a control person, because you add them up. Anything you do, you add them up. Okay. So if they're family members, you add them up. I don't know if you have a father and a son and they don't live together, I don't think you count it. But husband and wife in the same residence, you would count them. Now, the reason I was asking is that if they happen to be roommates, then no, you don't. So roommates don't count unless you're paying more than 25% of the bills or something like that. Or I think 75% of their bills. If you're paying a certain percentage of their bills, which they won't ask, then you can be considered conflated. So like kind of thing with the insider with like if you work at a brokerage firm, you can't buy on IPOs and stuff. Well, your roommate can unless you're paying their bills, and then they can't unless your roommate's your brother or sister, stuff like that. Okay. Hope that you do add up. So you will add a husband and wife to see if they're over 10% or not. Okay. Tyler. Okay. Okay. You did the gorilla stuff. Find my Series 7 Power Hour. If you want to watch the my GPT versus the 7 or my brutal exam, just as a not to test yourself, just to listen, because I might pick up a couple questions. But at least watch. But if you're, hopefully you're passing everything, right? I don't know what your scores are, but and Steven, stay on there. If you're passing the exams, you should be fine. Make sure you reread customer accounts, like accounts and disclosures, not the margin stuff, just accounts and disclosures, because it's low hanging fruit, and you'll get it. You're gonna come on Thursday and tell us how it went. Steven Minakuchi. Okay, I love it. That's awesome. That is outstanding. Do you have a better one? Oh well. Oh, Steve. Oh, I have a good one. I'm gonna save for later.
I passed the Series 7! That's what I'm talking about. Bring on the...
Wrong test, but that's okay.
Okay. We're in the 300 sections of Madison Square
I
Garden.
know, that's so funny. I know there's no way out there. I know. Well, that's where they put them. You know, and then this is what then these are in these people in the front. In the front. You know what they do. Okay. Okay. Thirsty trout. Okay. For me, none. Oh no, to be fair, I don't like the fundamental versus technical. They're not hard. I just fucking hate it. Okay. I just don't like it at all. But options are not hard. If you do them right, if you use my method, which I have the membership, you can buy the membership, and that will absolutely blow your mind away. It will the options membership, the little $20 that you spend per month is going to blow your mind away. Okay. It's so good. But like, I don't like, there's certain things I don't like. I don't like that. I don't like the DPP stuff, but they're hardly, the good thing is the stuff I don't like is not heavily tested, right? DPPs, I get it. It's fine, but they're boring. I don't like to do them. They're hardly tested, thank God. Fundamental and technical, I get it. I can trade technically. We ran a firm that did that. Okay, that's basically all anyone ever did. The balance sheet stuff bores the shit out of me, and that's why if somebody needs help with the 86 or the 79, I don't do it. Somebody else does. Okay, so okay. So Thirsty, what are the hardest topics for you on the 7? Okay. So now this is interesting. So based on the debate that we had on my thing was ETF versus mutual fund. Okay. And I think I have to tweak a couple of things because it looks like they were talking, but Ken and what's her name were talking over each other a little too much. So an ETF is technically an open-end fund, but it acts like a closed-end fund. So remember, mutual fund open-end, they issue shares once a day. It's an IPO every time. You can't trade it. You can't buy it on margin. But after 30 days, you can use margin. You can't sell it short. It's called forward pricing. All that you need in prospectus. A closed-end fund is none of that, right? It trades all day. You can buy it on margin and sell it short. You only get the prospectus if you buy it at the IPO. What else? I think that works. And then an ETF is an open-end, which means, so what that means is they have everything called creation units. So if you're like a billionaire, okay? If you bought a billionaire, oh, I see nervous. That's good. Nervous, stay on it. If you are a billionaire and you buy it, or a fund, and you buy all the shares that the ETF has in the same percentages, you can literally hand that in to the ETF creator, and they will give you shares of the ETF to match it. So those are called creation units. I'm simplifying it a little bit too much, but it is what it is. So technically it's an open-end fund, but not for us. But it acts like a closed-end fund, okay? It trades on the market. You can buy it on margin and sell it short. It's very liquid. You buy it at 10 a.m., you can sell it at 10:01 or 10:30 if you want. Whenever you want. You're not going to get the same price as someone who bought it at a different time, unless just random. Remember, open-end and closed-end are actively, let me make it clear. Mutual funds and closed-end funds are actively traded, which means they try to beat the market. They try to add alpha, and that's where if the manager leaves, you want manager tenure. Manager tenure is how long the manager's been doing it. You want to see if the manager's been there a while, so then you feel safe. And they're actively managed, and if they leave, you lose some alpha. ETFs are usually passively, unless it's actively traded, like ARK and Kathy Wood shit. But for the most part, they are passively managed, which means they are trying to match the market, and they don't beat the market. They rebalance. So let's say you have a certain percentages set up, and at the end of the quarter is kind of a skew, a nice word. They will rebalance it back to the original percentage. So, and they're very transparent. Okay. Boom, baby. I love it. Okay, here we go. Since it's a 7 night, I give you the 7 stuff. I found a new one. I think you'll like this, Jeff.
Dopamine.
All him. I didn't think you really like it, but that's all him. There's nothing else. It's pretty impressive, I think.
I mean, it's impressive. I
I
mean,
think you'd like it. I
a
just
couple of hours of sitting there listening to it.
What?
Could you listen to that for a couple hours?
No, I'm done. That was 10 seconds. That was enough. I actually cut it down. It was a lot longer. I made it only a 12-second one because the beginning he's just doing the beat. I'm like, okay, I need you to change some shit.
That's probably a good idea.
Yeah, I try to keep people entertained. But Catcher Joe, that's awesome. Now you're taking the 66 on December 6th. 666. I like that. Okay. Now, you're gonna focus on make sure you've read the entire book before you start taking a lot of finals. But congrats, it's great. Hey, as I asked, was there any surprise? Was there any surprise? Okay. Nervous. You're ready. The fact that you went to a new vendor, he flipped over to a vendor. He was doing cap and he was killing it, and he did this. That's awesome. Nervous. You're no need to be nervous. You should be a calm platypus now. Okay. Ooh, I know the end. Ooh, yeah, I can give you some, baby. I love it. Okay, so now I know what she needs. That's what she said. She wants suitability stuff. Okay, here's my thing on this. Okay, I'm going to keep this one up because it makes me feel like we're not coming up. Okay, so now,
you see, this is a perfect example of the Series 7 exam. What is the question they're asking?
Yes, I do. I figured out. We found it out. Okay.
We talk about this all the time. What is the best answer? Not the right one, the best one.
The best answer is, ooh, baby, I'll give you some. That's the best answer. Okay, now, she wants help with suitability. Okay, so here's the deal. First of all, I'm going to help you, but I have a suitability. If you go into my Series 7 crash course, I have Sean, say on there. I have a Series 7 crash course which covers a lot of suitability. But remember this, there is a holy trinity of suitability. It's the basis for everything, okay? So yes, you have to think about it. You can't just sit there and pass it, but you have to remember something. The holy trinity of suitability is growth, income, or safety. That's the foundation. If they say they want growth, you must address that question. You have to say whatever they do has to have either a variable annuity or not the first choice, mutual funds, ETFs, equity. It has to be some sort of equity that will grow. Capital, convertible bonds. If they say growth or capital appreciation, you have to address it. If they say income, even if they say income, but I'm aggressive, it's got to pay something. Bonds, preferreds, REITs, even a UIT or any kind of thing that pays, CMOs. You have to have something that pays you. Now, aggressive wouldn't go with CMOs. That'd be more the REITs and stuff, or dividend-paying stocks maybe, or high-yield bonds, but not. Income is income, you get paid. Third, safety. When I say safety, you say treasury every fucking time. If it's not there, then you go for something else. But literally, if they say safety or protection of principal or capital preservation, not capital appreciation, capital preservation, you're thinking treasuries. That's the way it goes. Again, that's a start. Find my suitability video. It's like 20 minutes. I have two. I have an option one, then I have a regular one. It's in the 7 crash course. I promise you it'll help you. Suitability, you have to. And again, here's the problem. The vendors, okay? The vendor suitability is kind of brutal
because they do the percentages, and yeah, the percentages will happen on the exam, but they're not like, 57% equities and and then like 52% equities. Defender, past perfect and cap are notorious for giving you those kind of stupid questions where you're like, I don't fucking know. I have no idea what between 52% or 58%. They go, and then they give some stupid story to back it up. And I'm like, that's just crap. So remember, the suitability, I'm not saying it's easy, but they give you what you need to know. Like, how about this one? So you have let's see if we can work with Jeff on this. I don't know if I think Jeff will get it because it's a nuance. If you have a 19-year-old, and he wants to start saving for grad school, and you give him a 529, and I first heard this, I'm like, God, this sucks. 529 covered L, UCMA, or IRA. What do you give him? So those are the four choices. So as a 19-year-old, 529, let's do this. Let's put it out to the crowd. What are you going to say? If I have a 19-year-old, are you going to do a covered L, a 529, an UGMA, or a trust? Those are the four things you're going to do. You guys let me know what you think you should do. That's a suitability question. I've given you everything you need to know. You tell me what they would do. Okay. Sean Trottier. Boom, baby. I love it. I love it, love it, love it, love it. I think I was asked him if he's related to. You a hockey guy, Jeff?
I'm not big. I'm more basketball.
Okay, but Long Island I think it was the Islanders, Brian Trottier. Yep. That is outstanding, my man. Okay. Hold on, let me find. Row. Definitely front row. Okay, let's see. Combat Riddler. Okay. Let's see if anyone answers that question. 72 my captain. Okay, 30% communicate. Okay, don't worry about that. Okay. I will give you the quick and dirty on communications. Okay. First of all, if you're sending it out, you have to be fair and balanced. You can't just say it's fucking awesome. That's one thing. If you send it out to 25 or less people, it's correspondence. It has to be reviewed by a principal. Not even all of them. Spot check and review. That's like emails, IMs, shit like that. If it's out to more than 25 people, it's considered, remember, not 25 or more than 25. That's considered retail. Okay. Retail communications must be pre-approved by a principal. And if your firm is in its first year of business, it all has to be sent to FINRA 10 days before you use it. Now, if it's a post like a website, static, needs to be pre-approved. If it's a chat room like interactive, they call it, or real-time stuff, it gets reviewed. It's even though it's retail, it's treated like correspondence. Now, if it's going out to institutions, like you're sending, what's an institution? Another broker-dealer, a hedge fund, a bank, an insurance company, a money manager, a pension plan, a mutual fund. Those are institutions, okay? You don't have to get it pre-approved. You send it to them. The idea is that they can defend themselves, okay? Again, you can't lie. And normally they would say, oh, put a watermark or some notification for firm use or institutional use only. Same thing with internal shit. You have to put for internal use only so they don't send it to retail. If you think it's going to be sent to retail, you must, even if you're sending it to a bank and you think they might send it to retail, you have to treat it as retail and get it pre-approved. Now, that's most of it. If it's a mutual fund or an option or a CMO or a futures, DPPs, they have to be sent to FINRA either 10 days before or after. Most of it's within 10 days of use, but some are before. I don't remember them. I know that mutual funds that have self-created rankings or ratings have to be sent ahead of time, 10 days before. If it's an option advertising, you have to send it to FINRA. If it's before they've gotten the disclosure document, the ODD, okay? If it's before they've gotten the
Dato 15. Disclosure. Approval. Trade. Options agreement in 15 days.
Before they got the disclosure document, like that little spice in there. It has to be 10 days before. If it's after they got I'm not going to do it again. After they got the disclosure document, then you have to do it within 10 days. That
is the quick and dirty on communications. So if I do a seminar where I'm speaking to hundreds of people like I do, and I don't hand anything out, it's reviewed. If I hand out a piece of paper, that's retail communication. That should help you a lot. Okay. Combat Riddler, go be a badass. Make sure you got customer counts down. You're going to nail this stupid thing. Okay. Okay. Elaine. I love it. Elena. Okay. Let's go, baby. We got this shit. Be confident. You got, oh, look what you got to, oh, you are ready. Yasmin, you're up. That is awesome. That you're going to nail this thing. You are ready to take this. Make sure your customer counts. Go get this thing. You're going to nail this thing. Everyone taking the test coming up, or any test, I need you to put on here, I'm going to pass the exam. Everyone needs to say, I'm going to pass the exam. Yasmin. Boom. Okay. I'm telling you that seriously, my brutal exams, understand, I can't say this enough. My brutal exams that I'm doing will absolutely help you a ton on the exams. They're not the questions from the exam, but it's the same vibe. So you get to feel the same way. You feel uncomfortable. And even on the 7 one, I didn't put a lot of options on it on purpose because I didn't want, I want it to be harder. Okay. But you did pass. So we get, since you're done, I'm so happy for you. That's my favorite still. It'll always be my favorite. Okay. 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 What do you think? Do you even need to ask? You're going to rock this thing. You're going to rock it. You're absolutely going to destroy this thing. 100% going to destroy it. I have no doubt, Decade. You're going to rock this thing as long as you go in there confident, get sleep, get off my live, go get some sleep, read customer counts, and beat this thing. You're going to rock this thing. Look, you're high and achievable. You get 86, and then you got a perfect. Yeah, I mean, you got an 82 on your last one. You're in great shape. You're fucking ready. Get some sleep. Okay. 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 Now, I'm getting confused as an agent of, okay, this is a 66 thing, but I will do it because it's a one-off. Okay. Not really. So an agent of an issuer works for the issuer selling their securities. If that's true, if they work for this issuer, they may not have to register if they sell exempt securities or exempt transactions. If they don't, they have to register as an agent of the issuer. I don't know how they do it. Maybe they do a U4, but that's what it is. Okay. Or they just get in trouble. Okay. No, on this test, control and affiliate are the same thing. They are. On this test, treat them as the same thing. Jane, I always worry. She has great questions, but she goes down. She's definitely Alice going down the rabbit hole, 100%. Okay. Oh, here we go. Good. No surprises. Okay. Boom. Okay. Yeah, good. I love it. Steven, that's awesome. I love that. You were ready. You were absolutely ready for that. After I met with you, he was 100% ready. Not because of me. I mean, maybe because of me, but he definitely was ready. He was ready coming out of there. December 9th, that's my daughter's birthday, so you better pass. CC Millie. Okay. How do you feel? A lot of ETF and CMOs. So here's the thing, okay? Oh, Enrique, hold on. We're going to get you there. I got you, baby. Don't worry about this. Okay. Now, I think I did skip over Enrique, but I will come back to you. I promise we'll get you there. Don't just focus on those things. As in, Jeff just did a video yesterday, right? Came out yesterday on what happens if you fail. And what the biggest problem is that you start focusing on the stuff that you did bad on. And you're not, as he said, you're not going to get the same test bank. So if you go, oh my God, I'm worried about mutual funds, and you go, oh, I did so bad on them. The next test, you get me more annuities and options. Or if the first test, you hardly got options. The next one, you may have a shitload of options. So CC, you have so much time. You literally have 20 something days. I would make sure that you make sure everything's done. I hope that you've reread the book and we're going. And if you want, if you remember, go check out his video that he just posted. Okay. Hey, is that your dog?
Mine is barking, so I think you're.
Yeah, just set mine off. Okay, that's right. Okay. Now, who knew that they're barking at dogs that are 100 miles away from each other? Okay. Okay, Enrique. Okay. I think he said he missed. Hold on, let's find it. Where is he? Okay. 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 Listen to me. I can't state this enough. I know that you can do this. I know that you are going to be ready for this. I know for sure that you're going to read the book and you're going to throw out your fucking phone and you're going to put it in a goddamn room. You're not going to look at your phone. If you don't need a calculator, so there's no reason for you to have a phone anywhere near you. So
Did he get 63 or did he not pass the 63?
I'm assuming the 63. I don't give a shit. Okay, so it does change that. Well, you got through. I'm all off now, Jeff. I'm all off. I'm going. I'm out of here. You can finish up. Okay. So. Okay, Enrique, lock in, baby. Tell me what you passed, what you failed, then we'll go from there. Okay. Okay, everyone thinks he did the 63, but we'll find out. Okay. Yeah, obviously it was 63. Because agent was all over it.
Enrique, you're creating quite a buzz here about the 63. We need clarity.
You almost got me to quit. Okay, so now understand. You need to make sure that you reread the book. I know that's a pain. I don't know what vendor you have, but SDC, if you can get SDC's book, it's a lot closer. It's a closer to the exam and it's shorter. Notman and Kaplan are good, but their books are so fucking long. It's just ridiculous. But if you can, I think the SDC book is 130 pages. I think Notman's and Kaplan's probably like close to 300. So you can do it, but I'm telling you, you got to get the SDC's better. Achievable is amazing. I love them to teach, but again, their questions don't look exactly like that. Nobody does, but some people complain about that. But their questions are awesome. As I tell everyone, buy Achievable, buy the Kaplan Q Bank. Michael Weiss has a link for a discount. Go in there, you can get it cheaper. Now, you are going to do this, okay? Enrique, here's the thing. You fucking need outside validation. You don't need motivation. You need discipline. You need to say, okay, I'm going to wake up. That's why I do these stupid 5 a.m. videos. I literally go outside in the pitch black dark and record a video at 5 a.m. You don't think people look at me weird? They go, what the fuck? My wife's like, what are you doing? Okay. Now, I try to get you guys early. Every morning, I'm trying to put out a video to say, fucking get going, okay? Now, it's dark out when I do it, which is nuts. Now, you don't need me. You do it, not me. You do it, okay? You're going to tell me you're going to pass it. And then every Tuesday and every Thursday, you're going to tell me what you did that week, okay? So on Thursday, you're going to come on and tell me what you did. Join a fucking study group. If you join the Facebook group, which we have, what the hell? Well, those are Facebook group. Hold on. This FINRA and NASA exam test prep network. This Facebook group, go in there and join one of the study groups in there. There's 8,300 people in there. There's about 2,000 that are active because people stay on and they like to read it, they like to see it, and they like to help each other out. Like I definitely see different people all the time. But you got to get in there, get a study group. They're the ones who'll help you. Because again, as I say all the time, yeah, I do the fucking songs because you pass. But that's not what this is about. People need someone to push them up when they think they're falling. And that's what I'm trying to do. Yeah, high five if you pass. Awesome. But if you fail, that's where you need the help. So Enrique, you're going to get this. You don't need someone else to make you lock in. You're going to do it yourself. Okay. Let's go. Okay. Let's go, baby. Sam Kushner. Any relation to Trump's son-in-law? Okay. Now, at what point do I know I'm ready to progress from unit quizzes? Okay. Once you're passing 80% of the chapter quizzes, then you're ready to move on to the finals. Again, 80%. You don't need 80s. Don't say I don't think you need 80s. You need to pass when you're done about 80% of them. And look, if it's margin, if you're under 70s on margin, DPPs, balance sheet, or options, you're fine. Options, if you're Kaplan mids, options are hard. So if you're mid 60s or higher on options, and margin and DPPs and margin and fundamental shit, you're below that. I don't really care. You move on. Okay. So here we go. So now, Now, test guru. That's okay. Test guru. Okay. Now, I'm having trouble with FIFO and LIFO. Okay. So here's the deal. If you have a regular brokerage account and you don't mention a method, okay, so FIFO, LIFO, if you have a regular brokerage account and you don't mention a method, they automatically do FIFO because nobody understands how to squeeze money out of people than the IRS. So they know that if you don't mention a method, they're going to do FIFO because 90% of the time, that's going to be the lowest cost basis, which costs you more. Remember, in a rising market, you want LIFO. You don't want FIFO is going to cost you more, okay? So in a rising market, FIFO costs you more because it's a lower cost basis. So if you don't mention a regular broker, it goes to a non-qualified account, right? A regular non-qualified, not a non-qualified retirement account. Non-qualified account is just a regular brokerage account. FIFO, if you don't mention a method, what should you do? Share identification. You can also leave a standing method as long as you update it by settlement, which is what? Yes, T+1. So FIFO is for regular accounts. LIFO is for non-qualified retirement accounts, okay? So like a variable non-qualified annuity, stuff like that, that would be LIFO because, again, the IRS knows how to get squeeze every dime out of you because they know that if you put 20 grand into an annuity and it grows to 100, they're going to take the money out. The first 80 that comes out is taxable. That's what they're doing to you. That's the LIFO part, okay? That's the whole LIFO part of this, okay? So again, regular brokerage account, it's LIFO unless you choose, so fucking choose. If you don't choose, it's LIFO. I mean, it's FIFO. If you have a retirement account, it's always LIFO. Now, if you have a non-qualified retirement account, remember, if you have a qualified account, it doesn't matter. It doesn't matter for a qualified because it's all taxable anyway. Now, let's say you have a non-qualified annuity and then you annuitize. Well, they can't tell what you're going to do. So then every payment is partially taxable, partially not. Hope that helps a little bit, Janice. Janice Sedas. Okay. Okay. Before I answer, what vendor? You've scored 50. Have you? I don't know. I mean, if you've watched the videos and reread, maybe you need a new vendor. Again, maybe you need a tutor. I don't know. I mean, maybe that's the way. Look, I try not on here to push the tutor. I mentioned it once and I kind of let it go. I really don't try to push that too much. But maybe you need someone just to talk to. Maybe a study group. Maybe join the FINRA thing. Join a study group. Maybe you just need to learn how to study. Maybe Jeff can help you. You hook up with him. There's his email. You can hook up with him, talk to him for like 3-4 hours, talk to him for like 30 minutes. It's cheaper than meeting with us. And maybe he can just figure out what's going on. Maybe there's something there. Maybe you're studying when there's shit going on. Maybe you have kids. Maybe, I don't know, Sadie. So maybe there's an outside source. Like, here's a question. When you read it, do you understand it? If you do, maybe this way, if you read the question, if you read the test part and you go, I understand it, and then you get to the question and you don't get it, that's a different thing. But if you're reading, go, I have no idea what it fucking says, you need a new vendor. Maybe get Achievable, maybe STC, whatever it is. Because if you're reading it and not getting it, you need some other help. Maybe what you do is and again, I'm not a fan of doing this for regs, but maybe you take a little chapter, throw it into ChatGPT and say, can you summarize this for me? That you could do. But again, they fuck up the rules all the time. They definitely hallucinate. Okay. Okay. Yes. Short. This is a great question. Short sales are always short term. Remember, whenever you short something, short sales are always short term. Always. Okay. Now, so short sales are always short term. That is absolutely what it is. So if you short a leap and you have a 2-year leap, you hold that position for 2 years, then you cover it, it's short term. The only time something's long term is if you hold an asset for 12 months plus a year. Then you sell it, it would be. Now remember, the other thing is
12 months plus a day.
What?
You mean 12 months plus a
plus a day. What did I say?
You said 12 months plus a year.
Oh, 12 months plus a day, right.
Okay.
So over a year, 12 months plus a day. Okay. Correct. Now, if you're long stock and then you buy put the same day, that rule still applies, 12 plus a day. If you buy the put after the day you buy it, then it's a oh, you do listen to me, Jeff. Okay. So if you buy it after it, you wipe out your holding period. Okay. So decayed. Look at that. He got it right. No, here's a question. So remember back to my question. If you're a 19-year-old or a sophomore in college and you want to save for graduate school, which is a little fucking late, but whatever, what do you do? Do you do Coverdell, 529, UTMA, or Trust? The reason you do 529, the reason you don't do Coverdell is because Coverdell stops at 18. So you can't. So I gave you enough. You're 19. You can't do Coverdell even if you wanted to. Okay? 529 is the only answer. UGMA you can't do because you're over 18. Okay. Okay. Ariona. Okay, I can't. So good delivery is, first of all, you deliver it in good form, meaning not mutilated, shit like that. And let's say and I'll get into the whole 100 chairs thing. If you do get into, if it does come mutilated, actually the transfer agent can say, no, it's fine. Like if it's mutilated, if the transfer agent says, no, we're good, you have to accept it. Here's my explanation of how the transfer agent is. So we were going to the Bahamas like 4 years ago. So this was my daughter was living in the city, and half my kids were flying out of JFK, and me, my wife, and my son, who's younger, were flying out of Newark. At the same time, we're going to meet Miami and then take up like a prop plane the rest of the way, which is not great. So we get there, and her passport's a little it's waterlogged, a little wet, a stain from whatever. And we got there, and she's trying to run it, it's not working. I get mine, my son goes through. And the United Airlines agent goes, nope, can't do it. You're stuck. You have to go get a new one, which is the day of the trip. And my other kids are leaving. And my wife's like, no, you got to go. We'll figure it out. I said, there's no way that works. So both of us said, there has to be a way. That's a valid passport. And they said, no. And she goes, well, if you want to talk to the TSA agent, you can. So we did. And so I think of the TSA agent as a transfer agent. He goes, no, it's fine. He said, why would we care? It's not ripped. It's fine. There's water on it. So now every time we went to customs, they would pull us aside and check our shit, but they let it go. So I always think of the TSA agent goes when the person goes, I'm taking it. TSA transfer agent says, no, it's fine. And they let it go. So that's what I think of. That's if it's mutilated, the transfer agent can override anything the firm says and says yes. Do you have a question?
No, I was just thinking though. I don't know why this crossed my mind, but do you remember the insurance machines that you could buy buy insurance in the airports?
Oh yeah. You buy flight insurance? Yeah.
Whatever happened to those?
You sell it now. They're when you buy your ticket. So if you go to ticket, there's a button where you can buy insurance, and they go 300 people have bought this already.
But I think it was cool.
It's not the same insurance. That's insurance. You know what? That's a good question. Maybe that's a new gig. Guys, anyone taking life and health, maybe you set up in an airport.
Vending machines for the life insurance. Bring it back.
Yeah, exactly. That could bring it back. I like that. That's good. They could do a body scan, right?
Yeah.
So they get your BMI so they can decide whether it's, is that insurance for the flight, just for like in case they die?
I have no idea. I just remember seeing it as a little kid, 100 years ago.
Yeah. And Ariona's like, what the fuck? Just tell me what I got to know. Okay. So now
you can buy Beats headphones out of a vending machine for $300.
Yeah. I know you can buy anything out of there now. Okay. So now let's talk about the actual delivery part. So if it's mutilated, you can decay it. But if the transfer agent says it's fine, it's fine. Now let's get into what you're talking about. Let's say I settle with you for Ariana for 400 shares. How can I get it to you? Remember, the odd lot is anything under 100 shares. A round lot is anything 100. A mixed round lot is 125, 130, something like that. So if the odd lots have to equal 100, not equal 200, not 300, they equal 100 at a time. So what's good delivery for 400 shares? A 400 share certificate, totally good. Now remember, there's nobody's doing paper anymore, but it is what it is. So 400 share certificates, totally cool. 300 and 100, fine. 100, 100, 100, 100, fine. 850s, fine. Because if I give you 8 lots of 50 shares each, you can put the 250s together to make 100. So that's 400. But 580s doesn't work because you can't put 80 together to make 100. Even though it equals 400, it's wrong. It's not okay. So they have to equal 100. How about 480s and 420s? You can match 80s and 20s, make 100. Totally cool. 460s, 440s, totally cool. 830s, does that work? No, that's not even the right amount. Okay. A bunch of 30s? No, because you can't make them add up to 100. 40s? 10 40s? No, because there's no way to make 40s work out to 100. 40 10s? Sure, you can stack the 10s to make 100. So the stacking of the odd lots have to equal 100 shares. Not 200, not 300, 100. Hope that helps a little bit. You won't get a lot on it. But again, if I'm doing, if it's like 440 shares, the last odd lot can be anything. It could be 41s, it could be 220s. It doesn't matter. To get to the last odd lot, you're fine. But to get to the end of the round lots, it must either be round lots or odd lots that equal 100 that you can put them together. Hope that helps a little bit. Okay. Okay. Yes, you're going to pass, especially after what I did. Let's go, baby. Janisa, we're going to pass. CC. Okay. Hillary, damn right. Third time's a charm. We got this. Hillary, get some sleep. You're going to nail this thing. Angie, I know you are. Kara, let's go, baby. Oh, there had to be some options. That's the worst. Okay. That's the worst. Having no options on the test. Okay. Okay. Okay, here we go. What is a business? Okay, a business development company is a closed-end mutual fund that buys small and medium-sized companies to bring them public. It's like a PE firm, but it's so that, again, they don't only have to do that, do different things. They can actually buy real estate and shit like that. But the point is, it's like a PE firm so that normal people can buy into it. Here's the thing. Kaplan says they're not liquid. They are. Okay. I mean, they're not as liquid as like fucking an ETF, but they're considered liquid because they trade on an exchange. So they're going to be considered liquid enough. That's the kind of thing. People say they're not liquid. They buy illiquid securities. And like I saw Kaplan said they didn't. And I looked it up in 5 different places. They all said liquid. It's not really a risk. The whole purpose of them is that they're liquid. PE firms are not liquid. PE firms, you get in, you get out, you got to be credited, stuff like that. Okay. 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 Boy, this is deep. Okay. If there's a halt on the stock, you can't do anything, but you can always exercise. You cannot trade the option if there's a halt on the stock. Now, if it's a halt because of an influx, remember, if it's a halt because of an influx of orders, that's not the same thing. But if it's an SEC halt or a news pending halt, yes, you cannot trade the options, but you can always exercise them. So again, if the stock is moving, it's too crazy, and they do like a fast market halt because it's an influx of orders, order inbounds, yes, you can still do options. But if it's a halt because of regulatory, no, but you can always exercise. Okay. No, you will absolutely be able to exercise for sure. Okay. You can always exercise your options. There was one back when we were at another place, Jeff. It was some Chinese company. Do you remember? And I think Alvin was like, they shut it down, I think, for 9 months. And one of our guys had options. I don't remember who it was, but I remember it was some Chinese company. It's like they're always trying to find some crazy shit. And it shut down for like 6 or 7 months. And they weren't, I don't even think it might not have ever opened up again. I don't know what they did with the options, but one of our guys had options. So he kind of got screwed.
I vaguely remember that, but then that kind of thing happens all the time where like a company doesn't report and then they say, okay, they're freezing trading.
Yeah. Right. Or they delist it. Yeah. There's so many things. Right. Exactly. It's usually the Chinese companies that are just kind of scammy. Not all of them are. A lot of them are legit, obviously, but the ones, that's where they come out of. Okay. Okay. Angela, welcome back, baby. I love it. Okay. And guys, don't forget, we're doing a Zoom for the Premier 7 people right after this is over. So guys, if you're on here, just hang on and hang out. Okay. Okay. Let's go, baby. Angela, we're ready. Get on the reading. You're taking it in 2 weeks, a little over 2 weeks. Let's go. Hope you read the book. Okay. Okay. Bella, Bella, you're going to be fine. You're going to rock this thing. Get some sleep. Here's what I tell you. If you're taking the test tomorrow, get the fuck off my live. What the fuck you doing? Go get some sleep. Read customer accounts. Watch my quick and dirty. Watch my power hour. Get some sleep. You're going to rock this thing. You're going to come on Thursday night and register rep, okay? You're going to come on here as a register rep. Be ready. But here's the thing. You need to be ready for anything. Remember, you need to be ready for anything. Okay. Yeah, the Kaplan's 193. It's not so bad, but I think the I think STC is like 125, 130. Okay. Levy, I'll get you in 1 second. Okay. Okay, good question. So in the next couple of days, right? So you're taking a Friday, so no tests after tomorrow, no finals after tomorrow. You should here's the thing. Make sure you're good with mutual funds. Make sure you're good with annuities. Make sure you're good with options. Make sure you're good with bonds. And then suitability, really. So I know it sounds like a lot, but you got to focus on that. Do a test tomorrow. Then do a test tomorrow. See how you do. Review the shit out of it. Then Thursday, watch the crash course. Go over customer accounts. If you have STC, or you've been doing, I don't know what vendor you have, but if you have STC, use the do the crunch time facts. I think Kaplan has a last minute thing too, and so does Notman. So most of the vendors have a last minute thing. Review that. Make sure you read customer accounts, which is STC. It's 2 and 14, but make sure you read customer accounts either the morning of or the night before. You're gonna nail this, Ethan. We're gonna knock this thing, and your scores are good. Your scores are solid, Ethan. Okay. No. Look, some people think the second time is harder, but I don't, and the third is definitely isn't. But I think it's partially because you are studying more. It sounds weird, right? It sounds weird to say the more you study, the harder it gets, but it does. Because if you kind of mailed it in the first time and you weren't ready, there's probably 20 or 30 questions that you go, I don't know, you just pick an answer. Like me through high school, I skated by. I was good at test taking, but if I took a test, sometimes I walked out after 10 minutes because I didn't know anything. It was the easiest test in the world. B, B, B. Just play the musical letters. Didn't care. So if you think that if you studied hard the second time, okay, if you study hard a second time, through the second time you walk in, you can maybe answer all the questions. So now it becomes a much harder test, even though it's not really. It just feels harder because it's more work. So you're not actually taking a harder test, but it just feels that way. But again, everyone feels like they're failing during the test. You don't know. The first one could have been your hardest one. I do say the first one's your best shot at passing because that's whatever. I just think that is. But after that, you're fine. It's not like they go, ooh, let's screw them over. That's not what they're doing. Okay, my practice, it's a video practice exam. If you look, I have 2 of them. Look up. Let's see if I can find it. Do I have it? I don't think I have my shit open. Videos. Video killed the radio star. Okay, so here's one. Okay, actually, I don't know what test I'm assuming you're talking about the 7. I'll say I'm assuming it's a 7. So I'll throw that in there. That's one of them. That's my GPT versus 7. It'll help a lot. And then where's my other one? It looks like I have AOC on it. There it is. Okay. Did I freeze? Did I freeze?
No, you're okay.
Okay. Sometimes when I go to a different link, it goes, okay. Oh, I'm almost near the end. That's funny. Okay, good. Okay. So Steph, again, I don't push this too much, but if you go to series7exam.org, you'll see all the rates and everything. Again, this is more about helping people. I'm happy to take the business, but I'm just saying it's mostly about helping. And if you have other questions, email Jeff at Cap Advantage Tutoring. Okay. So Sadie, if you're not understanding when you read it, go get Achievable. If you have Cap on a Past Perfect, get STC. If you don't understand STC, maybe buy the Achievable program. It's going to cost you. It's going to cost you a little bit of money, but it's worth doing because they explain it better than anyone else. And here's a better thing. They have a free trial. That's the best thing. Okay. Can I explain? So, okay, here we go. So we got 2 people asking options. Okay. So Sophia, I'll get to that. Okay. Can I explain a married put? Okay. So first they walk down the aisle, the father gives it away, and they get married. Now, so married put is this. If you're long stock, you're bullish. You want stock to go up, you're afraid it's going to go down. So if you buy a put at the same time as you buy the stock, so if you buy 100 shares at 50, and then you buy a 50 put, doesn't matter the premium right now. No matter how low the stock goes, you still get to buy it at, sell it at 50. So you don't have any risk other than the premium plus whatever the difference is. If it's married, if it's done the same day, okay? So if you buy stock today and you buy the put today, it's married, and then your holding period is as long as you hold it. So if you hold the stock for a year and a day, then it's considered long term. However, if you buy a stock on one day and buy the put any other day, right? If you buy the put any other day, you're going to wipe out your holding period, and it will not start counting again until you get rid of the put, whether it's exercised or sold or whatever it is, unless you hold it for over a year. So now, if I buy stock and then I buy a put 13 months later, no problem. So if I buy stock and buy a put between T+1 and T365, say, then it wipes out my holding period. If it's T366, I'm good. If it's on the same day, it's married. Hope that helps a little bit. Okay. Angela, I can't do that now. I don't know. Why would it be so fucking hard? It's just memorization. I mean, I don't even know where to go with that one. I mean, that's a whole fucking chapter. Maybe, let me see what I can do. I have do I have a video on that shit? I mean, that is just something I can't do. I mean, Angela, I'd love to help you, but that is not a fucking thing I'm going to do. Okay, hold on. I have some boundaries. Okay. Let's see if I have something for it. I mean, it's just memorized. That's the thing. And it's just really what you do is you watch it the night before. But let me hold on. Where's my shit? Hold on. Here it is. Okay, let's see what I got. Yeah, I mean, if you go here, I'm going to send you the playlist. Oh, no, I'm going to send you the videos. Here's the first video. Then, where are we? Where's my disclosures? Suitability. No. Oh, here it is. There you go. That is, so those two videos will help you probably answer better than I could do. Okay. Now, for the SIE, for a put option, now you remember something. So let's say my $4 winner Powerball, $4, baby. Read it and weep. Okay. So now I worked with a guy who got 5 out of 6 on like a $30 million one. But you know how much that's, he got like $1 million. You know how pissed he was?
You're still just statistically really far away.
I know, but it doesn't matter. They don't think that way.
I know.
And he remembers his unlucky is number 23, and that was the one that pulled. Okay, so now, and maybe that's why it's unlucky. But okay, so here's what I'm talking about, Sophia. This is a piece of paper that allows Sophia to sell stock at a price. It says Sophia can sell, it doesn't say that, but let's say it says Sophia can sell 100 shares at $50 until the end of November. You paid $4 for that, but I don't care about the premium. So you have the right to sell stock at 50. No matter how low it goes, you can sell stock at 50. All it is a piece of paper. You paid like $300 for it. So you can sell stock at $50 no matter how low the stock goes. So if that stock goes to 30, you can sell it at 50. Stock goes to 10, you can still sell it at 50 as long as you have this paper. But it does expire. So they say it's the third Friday of December. So right around Christmas, this thing expires. So if you have the right to sell, I don't have any stocks up there. If you have the right to sell 100 shares of IBM at $50 and the stock's trading at 40, what can you do? You have the piece of paper. You can go out in the market and buy the stock at 40 and then exercise this and sell it at 50. So you make $10 minus the premium. Again, all it is a piece of paper that says you can do something. This put says you can sell stock at 50. I have a good video on it, and if you look in the options basics one, but again, you bought a piece of paper that gives you the right to sell stock, no matter how low it goes, no matter how low it goes. And even if it goes down to 0, you can still sell it at 50. So you're bearish. But here's the good part. If the stock goes up to, say, 90, well, that's a fuck up, right? But all you lose is what you paid for the option. So let's say you have the right to sell it at 50 and the stock goes to 90. Are you going to use this? No. Why would you sell stock at 50 when you can sell it at 90? So you just throw it away. I'm going to rip it up, but no, I'm not doing that. I'm not giving away $4. So the point is, this piece of paper says Sophia can sell stock at 50. If the stock goes below, she'll use it. If it goes above, you'll throw it away and not use it. A lot of people use puts, as I explained to Angie, that as a protection. If you're long stock, let's say you own stock at 50. What do you want to happen? You want the stock to go up, but you're afraid it's going to go down. So wouldn't it be nice that even if it went down, you had the ability to sell it at a fair price? So let's say we're long stock at 50, and then we buy a 50 put. So even if the stock goes down to 30, instead of you selling it at 30, you can sell it at 50, but then the put's gone, but you don't lose any money more than the premium. Again, it's a quick and dirty. It's too fast on that, but go check out my options basics playlist. I'll go through I have a chart where I go through everything very slowly, but I hope that helps a little bit. Remember, options are just pieces of paper, contracts. A call gives you the right to buy. A put gives you the right to sell. Hope that helps a little bit. It does screw people up because it's kind of counterintuitive, but you should be fine. Okay. Seamus. Nice Italian name. They don't. They don't look like the exam, but I think they're harder. I think they're way too detailed. If you want to know what the exam looks like, vibe, go find my brutal exam, which I put in here, and then the GPT one. Those, it's the same kind of vibe as a test. Because I kind of get feedback, not from the actual questions, but I get, the feel. I know how, and I've taken the test multiple times, so I kind of get a feel for what it looks like. So I don't use the actual questions, but it gives you the same feel. Kaplan, if you're in the low to mid 70s and it's not for memorizing, you're fine. Really are. Okay. Adam, hope you're still here. I'm not too far behind, right? Yeah, I'm only about 15 minutes behind. The most important thing is, yes, obviously the agent stuff, and I have those videos. Ethics is all over. Agents, obviously, ethics is all over this stupid test, Adam. Ethics. You got to know that shit cold. Read it. The day before, read it. Like when I tell people to read customer accounts for the 7 and for the SIE, for the 63, it's always about ethics. Okay. Oh, that's perfect. Get quizzing on the chapters. After you do the chapters, start going on the finals. That's perfect. I love it. Okay. Yeah, but you kind of, okay, here's the thing. Why the fuck that's called, by the way, that's called the collar. No, it's not really the buy stop. I mean, you limit the loss, and that's fair. I guess you could do it. You can. I mean, I don't see why the problem is. If you're short stock and you're short a put, you're bearish, you want it to go down, you can do a buy stop. I mean, most of our traders, when they did short positions, they had to do, they put buy stops on there. But remember, there's no guarantee of anything. But yeah, I mean, why not? I mean, a protection, it doesn't cost you anything. Like buying a call. So if you short stock, here's the other thing. So some people, what they do is they short stock, they sell a put, and then they buy a call. So they have the protection, and they use the money from selling the put, right? But yeah, totally fine. If you do a buy stop, you can limit your loss. You can still lose money, right? I mean, that's fine. But remember something. Here's the thing. Yes, theoretically, shorting something, you have unlimited loss. But stocks don't move that much. Yes, I mean, if you short Tesla or Nvidia, yeah, fucking put a buy stop. But the other stuff, they don't move. The stocks don't move that much. And they're in a range. I mean, you're fine. So there's no problem doing that. Okay. What should we so after you finish the book, Sophia, do chapter quizzes first, then start doing finals. Do chapter quizzes, anything you do bad on, so 2 chapter quizzes. Anything you do under a 75 or 70 on, reread or watch a video on. And then once you're passing most of them, go on to the finals and go bang this thing out. Okay. But after that's over, after you're done with all the finals and you're in the last week, you got to make sure you have investment risks down, investment risk, and you have what the register rep can and cannot do. So again, whatever the rep can do or not do, you want to make sure that you're that you have an idea of that. Okay. Yeah, but okay, they should. People do it. Most people don't think about it. The other thing is, remember, a lot of people, this is the thing. Remember the traders, right? They buy stock. And if you made them put a sell stop down 5% or 10%, they're like, no. Here's the problem. Yes, people do that. But this is the other thing. When things go wrong, people try to double down. Or they think they're right. Okay. So yeah, the reason they don't buy stops probably is because they're egotistical. Even if it goes wrong, they want to still stay in the position. They think they're going to be right. So yeah, buying stop is smart. Buying a call is smart too. If you can buy a call for less than you sell the put, that's real protection. And a buy stop does help, but it doesn't. People literally, if I sell stock at short stock at 50 and I sell a 45 put, I have the premium. Maybe I put the buy stop at the premium where my break even is. Fine. And then I can't really lose a lot of money. There's no guarantee of anything, but you probably be fine. But understand, when somebody takes on a position, they think they're right. So if I'm short at 50 and it goes to 54, 55, I don't want to get out of it yet because I still think it's going down. That's behavioral finance, that you're not using your head, that if I lose 10%, get out of the fucking position. That's probably why people don't do it, because they're egotistical. Okay. Angela, you're fine. Oh, Sophia, did that help? I wasn't sure. I was just rambling, making shit up. No, I wasn't. Yeah, okay. Eltron. Okay. Yeah, Grayson, I can do that. Taking my essay Thursday. Let's go, baby. Tell me you're gonna pass. We're gonna nail this thing. Okay. Okay, we're gonna talk. Okay. Yeah, I'm almost done. I'm almost up to the fun, Grayson fun. Okay. So dividends. Here's the thing. There's some magical formula. So if you get dividends, if you buy stock, the reason they consider ETFs and stock tax efficient is if you own the stock long enough, your dividends are taxed at a capital gains rate, which is 15 or 20%. So the way we do this is if you own the stock for 60 consecutive days in the period 60 days before and 60 days after the X date, it's a qualified dividend. I used to think it was 16 before. It's not. It's if you own it for the 60 days in a row, anywhere in between 60 days before and 60 days after the X date, it's qualified. They're not going to make you figure that shit out. Kaplan Past Perfect might think, oh, how many days? But the test isn't doing that. If it's qualified, it's taxed at a lower tax bracket, 0, 15, or 20. If it's non-qualified, it's taxed at ordinary income. But here's the magic. If you have qualified dividends, remember, capital gains is 0, 15, or 20. A lot of people are 0. Because remember, if you have a couple, the average household income is $72,000. Okay. If you are a couple and you make under $96,000 a year, you pay 0 capital gains. So if you get dividends, qualified dividends, you will pay no fucking tax on that shit. That's why sometimes if you're younger, the math works that actually not doing an IRA and just buying shit in a regular account and letting it run might be better for you. You might end up better because at the end of the day, when you're 65, if you have $1 million in a regular account, that's all long-term gains, you're going to pay 15 or 20% taxes. If you have $1 million in a IRA, you're going to pay between 25 and 30% in taxes. So who knows? But anyway, qualified dividend is taxed at a lower rate. Non-qualified dividend is not. Now, if it's a REIT, this is why people like buying dividends on their long-term gains, long-term, because they're qualified and it becomes efficient. REITs do not have a qualified dividend. Mutual funds, yes. I used to think they didn't, but they do. A REIT does not have a qualified dividend. So if you buy REITs and get paid, it's always going to be ordinary income. Now, to be fair, even the dividends are ordinary income, but they're taxed like a capital gain. Hope that helps a little bit. Okay. Yeah, there's certain things I won't do, not now, because I don't have a chart. I don't have a thing to do. Hold on. But I got a wonderful video for you. Oh, I'm gonna deleting this one. Okay. And test guy, I'm there in a second. Hold on. There's my. That should be that. I also have a quicker one. That's me just being lazy and sitting in a chair doing it. Where is it? Sometimes it's just theory, not math. Here we go. Those are 2 videos that help you with the sell limits, buy steps. Okay, now test your after this. Okay. So I have a little thing prepared for people who would rather watch videos and read. Okay, so I'm just gonna let you run through it a little bit. Okay, here we go.
Do you know how easy this is for me? Do you have any fucking idea how easy this is? This is a fucking joke. And I'm sorry you can't do this. I really am, because I wouldn't have to fucking sit here and watch you fumble around and fuck it up.
I am out here for you. You don't know what it's like to be me out here for you. It is an up.
Read the fucking book. Okay? Read the fucking book. The video, listen, for the SIE, let me do this. Let me explain. For the SIE, maybe it works. If you're taking the SIE, you could probably do it. I'm telling you, I would read the fucking book. And I know you're saying you're a little worried, and I'm trying to tell you, if you're taking the next week, just fucking go for it. If it's the SIE, you can probably pull it off. If it's a 7, I don't like exam FX. They're okay. I don't love them. I like Achievable, STC, Kappa, Notman, even Past Perfect is better. Their questions don't look like exam. If you're taking the 7, go take my brutal exam and take my GPT versus a 7. If you do well on those, then you're fine. Okay, because those are the vibe. Okay, those really look like the exam. If you did the SIE, to go to my practice exam walkthrough, do the FINRA one, which the other guy mentioned, Eltron, and that you haven't seen it yet. And I have one on my practice exam walkthrough, the first one called 75 questions. Again, same vibe as the test. So fun. Tell me where you are now. Let's go with this. Yes. Okay. On the exam, pre-refunded, advance refunded, defeasing the debt, and escrow to maturity are the same thing. Yes, crossover refunding is not the same thing. It's a whole different world. But refunding is different than pre-refunding. So yeah, on this test, in real world, there's slight differences, right? But pretty much pre-refunding, advance refunding, escrow to maturity, escrow to call, and defeasing the debt are all the same thing. It's all that you're issuing a bond now, or some version of a bond, buying treasuries, and then using that interest to pay off the older bond until it can be called or whatever, and then you pay it off. So yes, on this test, they're the same thing. And crossover refunding is a little different, but again, it's not much of a difference. It's the same idea. Refunding, we're issuing a bond and paying it off now, like refinancing. Pre-refunding, advance refunding, defeasing the debt, escrow to maturity. As far as the test goes, same fucking thing. Okay. Hope that helps a little bit. Okay. What test? What test? Tell me what test. I didn't see what one is. Okay. Benjamin. Okay. Boom. I love it. That's awesome. I'm going to get through the book. I love it. Okay. Hold on. Let me get to Eltron and then, okay. Yeah, that's a good, that's, again, the FINRA SIE one is a good one. Okay. Oh, you can do it. Okay, he's taking the essay. So that I feel much better about that. For 7, I was going to have to lie to you and tell you you're going to be fine. If you're taking the SIE, do the FINRA exam, do mine, do that. You should be fine. Just make sure you understand everything. Okay. No, Eltron, everything's T+1. Write that down. Everything, you must be using an old book. I tried to delete most of my videos or adjust them that had anything. Everything's T+1 now. Everything is. Hold on. Somebody had a different question. Okay. This is more for a Thursday night, but I'm going to do it real quick. Canadian broker-dealers, if they have an existing client that visits the U.S., they do a limited registration. Very limited. If they have a client that moves to the U.S., they have to register. That's it. If they are already a broker-dealer and their client visits the U.S., they have to do a limited registration. Some states don't even make them do it. If their client moves then they have to do a full registration. Okay. So fun. If you're taking the SIE, you can pull it off with them. That's fine. But with the 7, please. And when you take the 7, go a different route. Fun. You're gonna be fine. Okay. And you have a week. You're fine. Okay. No, Benjamin, that's very true. So RMD is what happened. What's RMD? It's when you have to start taking the money out. Okay. You have to start taking the money out at the end, no later than April 1st, after you turn 73. But however, that's for Grayson. That'll be the last thing I do. Then I'll do that, but then I got to jump off. It's April 1st of the following year. You have until April 1st of the following year. But that's for when you're 73. So if you turn 73 right now, it's November. You have until April 1st to take out money for this year. But then next year, you have until December 31st to take out for 74. So you don't get a break that way. I hope that makes sense. So if you wait till April 1st of the following year to take it out, you're taking out April 1st and then December 31st again for that year. Hope that helps. Okay. Hope that helps, Ben. Benjamin. Now, I can go over very simply on this because I have a video on this in my taxes and my crash course. Cost basis is what you pay. Okay. Cost basis is what you pay. Okay. Okay. Oh, that's fine. I got it. So cost basis is what you pay. If you buy a call or you sell a put, your break even is cost basis. If you buy a put or sell a call, your break even is proceeds. Cost basis is what you pay. Proceeds is what you sell. The difference is your gain or loss. Proceeds is not your gain. Cost basis is what you pay. Proceeds is what you sell it for. The difference is your gain. When you buy a call or sell a put, it's your break even is your cost basis. When you buy a put or sell a call, because of the selling things, break even is your proceeds. Now, here's one good thing. Okay. If you buy stock or anything, there are 3 things that do not affect cost basis. If you buy stock and sell a covered call, your cost basis is what you paid for the stock, not the break even. Just a rule. Because the IRS, you're getting paid for selling the call. The IRS wants their money. They get paid. They want to get paid for that. Accrued interest does not affect cost basis. So if you buy a bond and you pay the accrued interest, that does not affect cost basis. And if you buy stock and get a dividend, that does not affect cost basis. If you have a retirement account, a qualified retirement account, your cost basis is 0, double zeros. It's 0 because you pay tax on everything. If you have a non-qualified retirement account, your cost basis is what's in the account. Okay. Hope that helps a little bit. Yeah, I think I can do that. Find my suitability, find my taxes video in my crash course. It'll help. Hold on. I got one more. I think I can do that. Let's see. My channel. Okay, here we go. Playlist. I'm going to give you the playlist, and it's like the first 5 or 6 videos are all me taking tests. Hold on. There it is. Nice. Was that you?
Yeah.
Okay. There. Okay. Perfect, Grayson. That helps. Okay, that playlist I just sent is how people can take the tests. The first 5 are SIE. I even did one maybe a month ago with ChatGPT versus the FINRA exam. Go check it out. It'll help you. The best that video that I did and the FINRA exam are the best gauges of where you are. Okay, not too bad, people. We got out of here pretty painlessly. Okay. Also, Angie, this is what you have to remember. Whenever you have stock in an option, I'm going to end on this. There's a reason I'm doing this. Whenever you have stock in an option, it's always based on the stock. And you know why?
Oh, stock is king. Stock is everything. When the market starts to swing, yes, it makes my heart sing. Stock is king. Stock is
I love that. I love that stuff. Okay, everyone. Fun. Thank you very much. You're going to nail it. Everyone, have a good night. I'm going to do my premiere class right now. And if you guys want to join in next Tuesday and Sunday, go to the membership link and buy in, and we'll see you on Sunday. Everyone, I'll see you in a week minus an hour.